Hello, everybody. Very good morning. I'll be waiting for 2 minutes and then we're going to start. All right. Very good morning to everybody watching this video. I am Mannat Sharma, Economics faculty at Oliveboard, and I will be taking the newspaper analysis for all regulatory exams every Monday, Wednesday, and Friday. So we are going to do the live mint analysis every alternative day. So let's not waste any time and let's begin with our analysis. So the first news that I found important in yesterday's newspaper was government mulls including MSMEs in PM internship scheme. So now look at this news. You are going to find some important words over here. One is MSMEs. What are MSMEs? What is PM internship scheme and its features? So these both of these things are very important from here. And what is the news about? So now, how are we going to go about with our analysis is first we are going to read what is in the current. So we are going to read what is in the current first. So what is the news all about, right? Then we are going to understand the important terms in the news. For example, if here they're talking about PM internship scheme, we are going to understand the features of the scheme, what the scheme entails, what are the beneficiaries, what is the aim, so that you have a comprehensive view of the entire news. Alright, and you know that in your exam you get maximum questions from your government schemes. So government schemes become very important, especially which are in news. Now there are n number of government schemes. You can't just go through every scheme in detail and learn it, right? So you need to filter out the important schemes. And how are you going to filter out the new schemes? Through your newspaper analysis, through your newspaper understanding. So now let's see first of all what do you mean by MSMEs. MSMEs are micro, small, medium enterprises. And I'm sure you know that almost more than 80% of the businesses, in fact 80 to 90% of the businesses in India are MSMEs. Maximum. So we have very less amount of large companies. We have maximum micro, small and medium enterprises. And how are MSMEs classified? How are they classified? They are classified on the basis of their investment in plant and machinery and their turnover. In these few years back, there was there was a revision in the classification of MSMEs. So you need to look into that as well. Initially, there were separate classification for investment and services, and now it has been clubbed for both investment and services. There is one classification only. So the classification is in multiples of 5. In multiples of 5. So if your investment in plant and machinery is less than 1 crore and your turnover is less than 5 crore, then you are a micro enterprise. So this way your classification has been done. So go and see what is the recent classification. All right. Now we are going to also talk about the PM internship scheme. Now Why is this in news? What is the news, first of all? We know that MSMEs, I just told you that MSMEs employ over 24.7 million people. 24.7 million people of our country are employed in the MSME sector, making up more than a third of India's workforce. Right? So now government is wanting to include these MSMEs in the ambit of the PM internship scheme. So we'll understand what this PM internship scheme is. And now why are they talking about including MSMEs in the internship scheme? Is because of the role of MSMEs in our country. And the government thinks that if we include the MSMEs in this PM internship scheme, then we'll be able to better cater to the unemployment status in our economy. Right? Now, why is it in news? The PM internship scheme, although well received in pilot phase, has not met its target. So because it has not met its target, so now the government is wanting to include MSMEs in this ambit. Now, which ministry is considered with this scheme? It is the Union Ministry of Corporate Affairs. It is considering expanding the scheme by including MSMEs to help increase employment. Like I just told you that to cater to the situation of unemployment in the economy, the Union Ministry of Corporate Affairs is wanting to include MSMEs in the ambit of this scheme. Right? The proposal to include MSMEs might be incorporated in the Union Budget 2025-26. So the new budget which will be proposed by the Finance Minister in this year, that will cater to this issue. So what is the MSME's potential for internships? What are internships? Internships you do side by side. This is not a job, but this is to learn. So this can be called learning by doing. So internship, while you are studying, you can do an internship in any company or any government institute, so that you get a stipend for that, you get paid also for that, and you get to learn also. This is kind of vocational training for your future, employment security. Right. So MSMEs have the potential to offer internships in large numbers due to their sheer volume. So MSMEs, there are so many MSMEs in India. So they can provide internship to a lot of youth, right? This could make a significant impact on the scheme's success. This will help now, just like I told you, that this scheme has not met its target. So by including MSMEs, we might, meet the target of the scheme. And MSMEs that are part of larger corporations' value chains could also contribute to generating internship opportunities, right? Now we need to understand PM Prime Minister's internship scheme. This we need to discuss in detail because it was recently launched in 2024. In fact, December 2024, and it has been in news for a while now. So there is a very high chance that you are going to get questions from this scheme. Now, this scheme was announced in budget of 2024-25, aims to provide internship opportunities to 1 crore youth in top 500 companies in 5 years. Now, what is important over here? That one, it is going to it is going to provide internship opportunities to 1 crore youth. What you have to remember is 1 crore youth, and in 5 years in top 500 companies. So this becomes important. This can be asked in exam, right? In your factual current affairs, just like I explained in the previous YouTube class yesterday, I explained the types of current affairs asked. So one type is your factual current affairs. So this can be asked in that. The launch date is December 2024. Ministry of Corporate Affairs, this is important because this can also be asked directly. It provides internship opportunity to 1 crore youth. This is important. You have to remember 1 crore youth in top 500 companies in 5 years. Very important. Budget allocation 2000 crore. You can see the budget allocation type of questions are also asked. So you need to know this also. Rupees 2000 crore was allocated for this. Right? Now, what is the eligibility criteria for PMIS? It targets youth aged 21 to 24 years. So basically, after you've done your graduation, so after you've done your, suppose you're doing bachelor's, after that you are eligible. So you can get internship. So 21 to 24 years. This is also important. You have to remember this. This is also a fact. Focusing on candidates from diverse educational background. So if you're 10th pass, 12th pass, ITI, polytechnic, diploma courses, fresh graduates from non-premier institutes, these are the kind of people who are included in the internship. Right? Any doubt till here? Any doubt over here? Good morning, Sanjeev Kumar. Good morning, Dev Jyoti Dhar. Let's look into the analysis right now and then we'll discuss your question. Right? Okay. Students from IITs, IIMs, national law universities, and individuals with professional degrees like CA, MBA, MBBS, they are excluded. So this can also be asked. What kind of individuals are excluded? Students from IITs, IIMs, national law universities, individuals with professional degrees. All right, like CA, MBA, MBBS, so that you can promote inclusivity for underrepresented groups. Now, if you include these kind of people also, then obviously the companies, they would prefer students who come out of these premier institutes. It is very easy for students who come out of the premier institutes to get internships or jobs because there are already placement drives, very high and better, placement drives. So we exclude these kind of students and include the others who fail to get jobs, right? Okay. Well, now let's see the key features of the scheme. It is the internship will be provided for 12 months. So it is a 1 year internship, you can say, um, offering substantial industry exposure. Okay, stipend will be provided. 5,000 is the stipend, out of which 4,500 will be given by the government and 500 is contribution of the company which is included, which is giving providing the internship, right? The participating companies. Insurance coverage. Interns are insured under government initiatives. What all initiatives are they insured under? Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, with the premium paid by the government. Now, when you are getting your insurance done through these schemes, you have to pay a premium, right? You have to pay some amount to get yourself insured. That is also going to be provided by the government. That will also be paid by the government. So you can see that there are a lot of benefits if you get into this. For 1 year you're getting an internship, so you will have exposure in the industry and it will be better for you to get employed in a good industrial sector, because if you see, then most of the companies are wanting prior experience, right? Most of the companies have a criteria that you should have your work experience. So through this internship you will gain considerable experience, and there's a very high chance that you will get good jobs, right? One-time grant, a grant of 6,000 is provided to interns to cover incidental expenses. So now suppose you get an internship in a company. You have to travel, say, from one state to the other, for example, to be a part of that company. So you will have to incur some expenses. So for that, not only for transportation, but for other incidental expenses as well, you are going to get a one-time payment of 6,000 initially, a one-time grant, so that you can carry on your expenses. A multilingual helpline and grievance redressal mechanism are in place to address queries and issues faced by interns. So if there's any issue, then you can report, or you can raise your queries through this grievance redressal mechanism or a multilingual helpline. So they are in place so that they can support the interns and the problems of interns, right? Okay. Now, internship opportunities. Till 1.28 lakh internships will be provided across 745 districts and 25 industries. So this is also important. This can also be asked that how many internships are being offered through the scheme, right? And it will be given in 745 districts. This can also be a fact-based question. 280 leading companies are going to participate, and these include Reliance, TCS, Tata Consultancy Services, Mahindra and Mahindra. These will also join the program. Over 6.2 lakh applications received during the registration period. So when the registration period was announced, then around 6.2 lakh applications were received. So you can see this closed on 15th November 2024. So now you can see that how this scheme, the internship schemes, are benefiting the students, the interns. All right. Okay. Now, what is the significance of this scheme? First of all, I told you that if you are providing internship, if you are providing internship to students, you will have a prior experience before you enter any industry or any company, right? Because every company wants prior experience. So that is one of the criteria before employing people for their jobs, right? So it provides hand-on industry experience, equipping young individuals with practical skills to enhance their job readiness. So it gives them an experience, a hands-on experience to equip these young individuals to get into the employment area, right? Focus on nurturing skills in real work environments. Now, there's a huge difference between studying, reading books and understanding through books. Experience, hands-on experience is very important. So when you gain skills through experience, that learning by doing, you learn better. बोलते हैं ना कि if you practice, if you do it practically, that is going to help you understand in a better way and to nurture your theoretical skills. So theoretical skills are different and your practical skills are different. All right. This scheme is a cornerstone of the government's vision for a skilled and employable Bharat, complementing the broader mission of Viksit Bharat. So means Viksit Bharat means a developed India. So our vision is to become developed by the year 2047. So this is one of the step towards becoming Viksit Bharat and our vision of a skilled and employable Bharat. So this is our vision. So you can see this is a vision, a long-term plan. That means there's huge unemployment in our country. Okay. Now, based on whatever we have done right now, try to solve this question, and I'm looking at the chat box. All right, try to solve this question. PM internship scheme aims to provide dash internships over dash. I want the answers from you. If you have listened to me very carefully, I told you that some these things are important. So I want answers from you. PM internship scheme aims to provide dash internships over dash. How many years? So the answer to this question is 10 million, 5 years. I explained 1 crore youth, 1 crore youth in 5 years, 1 crore youth in 5 years. So 10 million, 5 years is the correct answer. Let's move forward. SEBI proposes stricter disclosure norms for non-profit entities. Now, what is important over here? One, SEBI. What is SEBI? And non-profit entities. Let's see what is the news about it. The Securities and Exchange Board of India. Just a second. The Securities and Exchange Board of India has released a consultation paper aimed at enhancing the operational framework of the social stock exchange. So what is the news about? That SEBI has released a paper. What kind of paper? To enhance the operational framework of the social stock exchange. If you're not aware of the social stock exchange, you know what is a stock exchange? You know about NSE, You know about BSE? Similarly, on these lines, a new stock exchange has been made, which is the Social Stock Exchange. So it was introduced to help non-profit organizations and social enterprises to raise funds. So when was it introduced and why was it introduced? It was introduced to help NPOs, the organizations which are non-profit. Their motive is not to earn profit. So it was introduced to help these NPOs and social enterprises to raise funds to address social issues like welfare for disadvantaged groups, vocational training, environmental conservation. So what is this stock exchange? Basically to raise funds. To raise funds. This you have to remember. Okay? And raise funds for what? For social welfare. Raise funds for social welfare. Alright. The proposed revisions aims to provide the system's transparency, broaden the eligibility criteria, and introduce stricter reporting requirements. So, they released a paper, a consultation paper. What is in this paper? The revisions. There are revisions related to what? To improve systems transparency, to bring in transparency, to increase the eligibility criteria, and introduce stricter reporting requirements. Right? So this is why the revisions have been made. So what is the news about? That SEBI has released a consultation paper. Regarding what? Regarding your revisions related to the social stock exchange transparency, eligibility criteria, etc. And what is social stock exchange? It was introduced, it is like a stock exchange, like your National Stock Exchange and Bombay Stock Exchange. Why was it introduced? To raise funds. Raise funds to help NPOs and your social enterprises to raise funds for what? For social welfare. In simple terms. I hope this is clear. Now, as of December 31, 2024, 111 NPOs were registered on the social stock exchange. So this becomes part of your current. You have to remember this. This is a fact that you have to remember. Ki as of now, as of 31st December, how many NPOs were registered? 111 NPOs. With 10 issuing zero coupon, zero principal instruments. Now this also becomes important, that what are zero coupon, zero principal instruments. We'll see it in the next slide. Okay. So, 111 NPOs were registered on the social stock exchange, with 10 issuing zero coupon, zero principal instruments to raise funds. So, what kind of instrument was used? Zero coupon, zero principal instrument was used to raise funds. So, this is also important that this instrument was used. SEBI's proposal introduces stricter annual compliance and impact assessment requirements, extending the deadlines for financial year 23-24 to January 31st. So they have extended the deadline for their compliance. For compliance, they have extended the deadline. You can fill up all the forms or the important documents and compliance related issues. You can resolve it by, you can comply by the guidelines by 31st January. The consultation paper also suggests broader eligibility for legal structures like trust societies, companies registered under Section 25 of the Companies Act. So this is also important. So eligibility, I told you that they are also talking about increasing and broadening the eligibility criteria for legal structures. What kind of legal structures? Trusts, societies, companies which are registered under the Companies Act 1956. And under which section? Section 25. So this can also be asked directly. Which section? Section 25. Which act? Companies Act 1956. Right? SEBI is also introducing the concept of social impact assessment firms to independently evaluate NPO performance. So what is the social impact assessment? Now these NPOs are raising money. Now they are raising funds. But are they utilizing these funds properly? Are they utilizing these funds for social welfare? Are they utilizing for social welfare? is there any misuse of funds? Is there any misuse of funds? Or is anything illegal happening? Right? So, SEBI is introducing the social impact assessment to independently evaluate NPO performance. Clear? NPOs will have a 2-year window to register on the social stock exchange without raising funds, but must comply with mandatory impact reporting. So they have to talk about, they have to report about their social impact assessment, but they will get a 2-year window to register on the SSC without raising funds initially. Okay? Feedback on these proposals is open until February 10. So you can give your feedback related to this. You can provide a feedback. And the window is open till February 10. Clear? Now, let's understand what are zero coupon, zero principal instruments. They are financial tools. This so we can understand these are financial tools. Enable NPOs to raise funds through the social stock exchange. Okay, so zero coupon, zero principal means that you do not have to pay back. You do not have to pay back this amount. Zero coupon, zero interest, without interest. You don't even have to provide interest. For example, you've raised funds through the exchange. So you do not have to pay interest, and you will not also pay back the principal amount. You will not pay back the principal amount. Right? So if you have raised fund, zero coupon means zero interest. You don't have to pay any interest. And zero principal means you will not even pay the principal amount. For example, if you've raised 1 crore. So usually what you have to do is that if you've raised the funds, you have to pay some interest and you have to also pay the principal back in after some time. Right? But in this zero coupon, zero principal instrument, you do not have to pay even the interest on the amount that you've raised, and you will not even have to pay back the principal amount that you have raised. Clear? What is the purpose now? Traditionally, NPOs rely on donations or corporate social responsibility funds. So, traditionally, that means initially what the NPOs were relying on for their fund generation, they were relying on your either corporate social responsibility funds or your donations. But that was not enough. You know that there's a huge gap in our CSR responsibilities. There's a lot of issue in case of CSR. Why? Because corporates are kind of, misusing this corporate social responsibility and they're not responsible enough to provide funds through the CSR. They are doing some kind of, you can say, ghapla or, something. Okay, so initially they were raising funds for this, but it was not enough. Right? So with these zero coupon, zero principal instruments, donors can support NPOs by purchasing these securities listed on social stock exchange. Clear? Now, what is the structure of these instruments? They resemble bonds but differ significantly. How? Unlike regular bonds, they do not involve interest payments. Just like I told you, zero coupon means you do not have to pay the interest, and zero principal means you do not have to pay the principal amount also. These instruments are purely donation based. So they are like donation. They are not donation. They are just like donation. So you do not have to return that money. In traditional stock exchange, what you have to do is when you are raising funds, you have to pay back interest to the stakeholders, to the shareholders, and also the principal amount after some time if they want it back. But in this case, you are not paying. They were recognized in 2022 by the central government, Ministry of Finance. They classified these instruments as securities under Security Contracts Regulation Act 1956. So these zero coupon, zero principal instruments are significant. Now, what are SEBI regulations for issuing zero coupon, zero principal instruments? This is also very important. That what is the criteria? The minimum issue size of these instruments is set at 50 lakhs. So what is the minimum issue issue size? 50 lakhs. Right? Minimum application size is rupees 10,000. You have to remember these facts. You might be asked questions from here. At least 75% of the proposed funds must be subscribed, otherwise, the funds will be refunded. Alright, 75% of these proposed funds must be subscribed. These instruments must be issued in demat form, dematerialized. What is demat form? It is electronic form. So you have an account electronically where you store your whatever you are buying, your shares, debentures, whatever you are buying. It is to be stored in the demat form. Right? They are non-transferable. So you cannot transfer it to the other person. You can't sell it. You cannot buy, sell it. Right? And these instruments are listed on the social stock exchange. So your question can be asked that where are these instruments listed? So social stock exchange. What is the minimum issue size? What is the minimum application size? Right? It can be stored in demat form only. It is non-transferable. So these are some important things that you need to remember. Clear? Now let's understand the key highlights of the news. So what are they talking about? What is the news about? To improve the social stock exchange framework to better support the NPOs and enhance their social impact. So they are basically talking about improving the entire framework. What is the current status? I told you this is also important. 111 NPOs registered till now, and out of that 10 have issued zero coupon, zero principal instruments. What are the proposed changes? Broaden eligibility to include trusts, societies, and Section 25 companies. Section 25 under the Companies Act 1956. Mandatory annual impact assessment reports. This will be important within 90 days after the fiscal year. So mandatory annual impact assessment reports, like once in a year you have to give your report related to your impact assessment. Stricter disclosure norms for financial governance and social aspects. Very important. What are the new requirements? At least 2 full-time social impact assessors for empanelment under self-regulatory organizations. NPOs can register for up to 2 years without raising funds but must fulfill reporting obligations. So this is also very important. So what are the new requirements? That you need to have 2 full-time social impact assessors who are going to assess the social impact of the NPOs, whatever they have raised, are they using it properly or not? Right? And the second one is that NPOs can register for up to 2 years without raising. So they have a 2-year window, like I explained in the previous slide. And they have extended the deadlines till January 31st, 2025. I hope it's clear. Based on what you have understood, let's solve this question. Is there any doubt till now? Any doubt till now? Let's solve this question. What is one of the proposed changes by SEBI for NPOs under the Social Stock Exchange framework? First is allow NPOs to register for 2 years without raising funds but with mandatory reporting. Allow NPOs to register for 3 years without raising funds. This was 2 years to 3 years. Abolish zero coupon, zero principal instruments. This is completely wrong. This is also wrong. Allow NPOs to register for 3 years. Right now in the previous slide only we saw that it is 2 years. Replace NPOs with for-profit enterprises. Not at all. We did not talk about this. Eliminate the need for impact assessment reports. No. In fact, we talked about this impact assessment report which needs to annually be reported. Right? So the correct answer is A. Clear? I hope there's no doubt till here. Shiva Sai says A. Absolutely correct. Very good. Alright. Paytm's merchant acquisitions stretch to global markets. So here what are we talking about? That Paytm has launched UPI International UPI International, allowing Indian travelers to make UPI transactions at select global locations. So now we know that the concept of internationalization of rupee is, people are talking about internationalization of rupee. What does this mean? To bring rupee in the international domain, to use it in international transactions. So we are talking about using the rupee for cross-border transactions. For cross-border transactions. So now Paytm has introduced its UPI International, and that is why it is in news. So it is contributing to internationalization of rupee. Okay. So Paytm's parent company 197 Communications is broadening its global presence. So it is broadening its global presence by setting up new subsidiaries in countries like UAE, Saudi Arabia, and Singapore. So, what countries are they talking about? Middle East countries like UAE and Saudi Arabia, and also Singapore. This move aligns with the aim to expand payment services and merchant acquisitions globally. So, what are we talking about? Expanding the payment services so that you can, seamlessly, without, the need to get it exchanged, you can use UPI International to carry out your transactions. Despite reporting a reduction in quarterly losses, Paytm sees international growth as a long-term opportunity to strengthen its business model. So this is what the news is about, right? Paytm has introduced UPI International, allowing Indian travelers to make UPI transactions abroad, targeting regions with significant merchant and payment opportunities. So UPI International for Indian travelers who can make the payment in INR through UPI International. The company is investing how much? Rupees 20 crore. So what is the, based on this, let's understand what is the answer to this question. What is the primary focus of Paytm's global expansion strategy? To acquire merchants and facilitate payments in international markets, to reduce its quarterly financial losses, to introduce cryptocurrency based payment solutions. We did not talk about this at all. To merge with other global fintech companies. We did not talk about this. To focus solely on B2C businesses in foreign regions. Not at all. To reduce its quarterly financial losses. Did we directly talk about this? No. So the correct answer is to acquire merchants and facilitate payments in the international markets. Yes, A is the correct answer. Very good. Let's move forward. Government selects 24 companies for 3516 crore white goods PLI. So now look at the news. What is important here is this PLI scheme. What is PLI scheme? Production Linked Incentive Scheme. And what is important is white goods. What are white goods? What are white goods? If you don't know what are white goods, you cannot understand the news first of all. So white goods are basically the household electrical goods, you can say. Electrical appliances used in the household. They're typically white in color. So you can say AC, refrigerator, LEDs. So these are some electrical appliances which are used in our day-to-day lives and they are white in color. So they are classified as a different category called white goods. So these are what white goods mean. PLI is a production linked incentive scheme. So what is the scheme? I'll tell you the crux of this scheme right now to understand the news and then we'll go further in detail. So PLI scheme talks about incentivizing the industries once they have reached a sales goal. So before providing them subsidies, see, if they have established a company, if they have established a firm, so giving them subsidies before in the initial stage, rather than that, you provide them incentives if they fulfill some criteria. For example, they have increased their sales. So because of the incremental sales, you are providing them with incentives. So that is what your PLI scheme is about. Now, government selects 24 companies for 3516 crore white goods PLI. So what is the news? That the Department for Promotion of Industry and Internal Trade has approved 24 companies under the Production Linked Incentive Scheme for white goods in its third round. So they have approved 24 companies under this PLI scheme's third round. This is aimed to boost domestic manufacturing of companies. Why? So that manufacturing of components. So what are they saying? That rather than importing from foreign countries, you manufacture it domestically. You would manufacture the components of white goods domestically, right? So they have included in this ambit 24 companies. So what are they talking about? That if these 24 companies fulfill certain criteria, they manufacture the products domestically, they manufacture components domestically, then they will be provided with incentives, right? If they meet that criteria. So investment, how much investment is done? 3516 crore. This is important. This can directly be asked. Now, what are the highlights of the news? 2299 crore from 18 new companies. What are the investment details? 2299 crore from 18 new companies. 1217 crore from 6 existing beneficiaries. This is the amount. This is the investment. This is how the amount has been raised. Right? Which are the selected companies? Major firms like Hindalco Industries, LG Electronics, Voltas, Blue Star Climatech are included. So, question can be asked from here. The statement can be framed from here. Clear? Any doubt till here? Right. Sector specific focus. What is another highlight? That they are talking about, specifying a few sectors. So, what are the sectors? Air conditioner component manufacturers are committing 3260 crore. LED light component manufacturers are contributing 256 crore. Out of this total amount, there are two sectors which are focusing. One is the air conditioner component sector, and the other is your LED light component sector. So this is also important. This can also be asked in the statements that which two sectors are included in the white goods. White goods are so many, but what are we talking about? Air conditioner, LED. Right? Overall participation, 38 applications were received, 18 new and 6 existing firms selected. Alright, so out of the 38 applications, 24 were selected. Now let's understand the PLI scheme for white goods. White goods, which all white goods are we talking about? Air conditioner and LED lights. What is the objective? To make manufacturing in India globally competitive by removing sectoral disabilities, creating economies of scale, and ensuring efficiency. So, what do you mean by economies of scale? Economies of scale is a concept wherein you increase your scale of business or bring an improvement in your own management, because of which the average cost of the firm decreases. So we know that if the cost decreases, the overall price decreases, and this is obviously beneficial for the consumer. Right? So economies of scale can be of two types: internal economies of scale and external economies of scale. In case of internal economies of scale, You have, suppose, improved your management. You have brought a new manager who is exceptional, and उसने अपनी डीलिंग से, अपने माइंड से, अपने कॉन्टैक्ट से, it has improved, the company's role, the company's manufacturing, and because of that there is a reduction in the average cost, and because of which there is an improvement in the overall functioning of the company also, and the overall cost and the price is also reduced. External economies, on the other hand, is related to overall industry. So we're talking about the entire industry, not one particular firm. So, for example, the government has brought a policy change, provided some subsidies, incentives. So, because of that, your average cost reduces and it is overall beneficial. So now through this scheme, through the PLI scheme, we are talking about domestic manufacturing, so that economies of scale are created, sectoral disabilities are removed, and efficiency is attained. When was it launched? It was launched, what is the launch year? 2021 till financial year 28-29. Very important. And notified by this department, right? DPIIT on 16th April 2021. Right? Which is the nodal ministry? Ministry of Commerce and Industry. These kind of questions are very important. Which ministry has notified? Which is the nodal ministry for this scheme? Ministry of Commerce and Industries. It is a central sector scheme. Now, there are two types of schemes. One is your central sector scheme, and the other is your centrally sponsored scheme. In case of central sector scheme, the central government provides the entire fund, right? And in case of centrally sponsored scheme, central government provides fund, but there is also a contribution of the state government. So this minute difference, you need to know what is the difference between central sector scheme and your centrally sponsored scheme. So in case of central sector scheme, the entire fund is being given by central government, and in case of centrally sponsored, the fund is distributed. Central government is sponsoring it, but there is also contribution of the state government. What is the outlay? 6238 crores. Important. What are the financial incentives which will be given to the applicants? 4 to 6% on incremental sales. So if they, their sales increase, they have incremental sales, 4 to 6% is the financial incentive that will be provided. And for the base year, over the base year 2019-22 eligible companies. So base year, what do you mean by base year? How much sales you, what was your sales during 2019-20? And compared to that, how many more sales, how many incremental sales are you doing? So what is the base period? 2019-20. Suppose 1 crore sales was done in 2019-20 by the company. Now if 2 crore sales are done in 2025, so what is the incremental sales of 1 crore? Based on that, financial incentives will be provided. Clear? It provides a broader impact. Since its launch in April 2021, 84 companies have been approved across all PLI rounds with a total expected investment of 10,478 crore and an estimated production value of 1,72,663 crore. So, they are ensuring a very broader impact. They're including so many companies across the country. Clear? Any doubt till here? All right. Now, based on this, whatever we have discussed, let's solve a question. Which of the following is not a key objective of the PLI scheme for white goods? Boosting domestic production of key components like compressors and LED chips. Did we talk about compressors? Attracting foreign direct investment for software development. Strengthening India's manufacturing ecosystem. encouraging investment in conditioner and LED component manufacturing. All are correct. So what is the answer to this question? What is the answer to this question? So the answer is attracting foreign direct investment for software development. So they are talking about not, which is not a key objective of PLI scheme. So we talked about boosting domestic production. We talked about strengthening India's manufacturing ecosystem, encouraging investment in air conditioner and LED component manufacturing. We talked about these terms, right? We did not talk about direct investment for software development. Clear? Okay. So India's credit guarantee scheme for startups holds high potential. So now what are we talking about? We are talking about what becomes important here? The credit guarantee scheme for startups. So they are talking about the potential of this scheme for startups. Right? So this becomes an important part of our preparation. Again, schemes, government schemes, very important. So what is the news about? So this article discusses India's credit guarantee scheme for startups, which aims to provide collateral free loans. So what is the scheme about? Providing collateral free loans to startups. What are collateral? What do you mean by collateral free loans? That when you go and take a loan from the bank, when the startup goes and takes a loan from the bank, they will not have to keep something as a collateral. So basically what happens is when you go take a loan from a bank, you have to keep something with the bank to ensure that you are going to return it. For example, you keep your house as a collateral, or you keep your car as a collateral, that if in case I'm not returning the loan, then the bank is going to seize that property. That bank is going to seize that property or the car or whatever I have kept as a collateral with the bank. So this is to ensure that I am a credible borrower and I'm going to return that amount back to the bank. Right. So now this particular scheme, India's credit guarantee scheme for startups, talks about collateral free loans to them, right? So the scheme is a part of broader government efforts to foster innovation and entrepreneurship. So what is it? To foster innovation and entrepreneurship. Now people do not have enough collateral to keep with the banks. So to remove that criteria, the government has ensured this scheme. So what is India's vision? To become a global startup hub by the year 2047. So this is India's vision. So by 2047, like Viksit Bharat at the rate 2047, we need to become a global startup hub. So when was this scheme, India's credit guarantee scheme for startups? When was it launched? 2022 by Ministry of Commerce and Industry. What is the objective? Providing collateral free loans to startups. So this is very important. The launch here is very important. Ministry is very important. Objective is important. Collateral free loans to startups encourages financial institutions to lend to startups and reduce risks associated with financing them. So it encourages the financial institutions to lend to startups. So if there is a scheme, if the government has launched a scheme, so it encourages the financial institutions to give them loans without collateral. Which is the implementing agency? Important, you have to learn it. National Credit Guarantee Trustee Company Limited. Okay. Now, let's understand what are the features of the scheme. What is the scheme all about? DPIIT will constitute management committee. So management committee will be constituted. Risk evaluation committee for reviewing, supervising and operational oversight of the scheme. So what is the institutional mechanism? How is this scheme's operation will be monitored? How will it be monitored? Through the management committee. and the Risk Evaluation Committee. They will review and supervise that क्या ये scheme अच्छे से चल रही है? Is this scheme working properly? Which are the eligible startups? Startup as recognized by this department, right? Startups that have reached stage of stable revenue stream, that they are generating enough revenue. So this is also criteria. Not every startup can go and take up a loan, a collateral free loan. Not that much risk. One, that first that startup needs to be recognized by the department, and they should have a stable revenue stream audited in a 12-month period. So पिछले 1 year में you should have enough revenue so that you are in a good position to pay back the loan. Startup not in default to any lending or investing institution. So the startup should not be a defaulter, because if it's a defaulter, then the institution will not provide loan, that to collateral free loan, to the startup. So these kind of startups are eligible. So this can also be, the eligibility criteria can be asked in the examination. So which are the member institutions? Scheduled commercial banks. What are scheduled commercial banks? Commercial banks are either scheduled or non-scheduled. The difference is that scheduled commercial banks are listed in the second schedule of the RBI Act 1934. So the banks which are listed in the second schedule of the RBI Act 1934 are called scheduled commercial banks, and which are not listed in the second schedule are called non-scheduled banks, not non-scheduled commercial banks, right? So which are included? Only the scheduled commercial banks are included in the scheme. Non-banking financial companies, NBFCs, are included, which have a rating of BBB and above, having minimum net worth of 100 crores, and SEBI registered alternative investment funds. These are the member institutes. What are the components of the scheme? Very important. The question can directly be asked, what is the component of the credit guarantee scheme for startups? Which of the following is a component? या फिर which of the following is not a component? So first is a fund of funds scheme, which focuses on equity funding for startups. Then is a Startup India Seed Fund scheme, which offers grants for proof of concept, prototype development, and market entry. Then you have your credit guarantee scheme for startups, which is which guarantees loans of up to 10 crore, helping startups secure funding. So your credit guarantee scheme for startups includes these three components: fund of funds scheme, Startup India Seed Fund scheme, and credit guarantee scheme for startups. Clear? Let's solve this question based on what we have learned. Which of the following is not a component? So we are talking about not a component of India's Startup Credit Guarantee Initiative. Fund of Funds scheme, Startup India Seed Fund scheme, Credit Guarantee scheme for startups, Digital Payments Interface Incentive scheme, all are components of the initiative. I want answers. What is the answer to this question? What is the answer to this question? Right now, in the previous slide only, we saw that Fund of Funds scheme, Startup India Seed Fund scheme, and Credit Guarantee scheme for startups. These three are part of the Startup Credit Guarantee Initiative, which is not Digital Payments Interface Incentive scheme, is not a part. So your answer is D. Clear? So I hope you like the session. This is how we are going to cover the most important news every alternative day, Monday, Wednesday, and Friday. We are going to cover these important news, right? And I hope you liked the video. If you liked, do follow, and I will see you on Wednesday with the next session. All right, take care. Have a nice day.